Greetings, my YouTube family. Thank you so much for visiting this channel. So today I'm going to do a review for Meta platforms to just see if it is a good investment. But before we get started, I'm going to disclaimer that this content is meant for educational purposes. As such, it should not be taken as investment advice. So please have that in mind. Now, what I'm going to do is I'm going to quickly walk you through uh, the business profile for Meta as a business, and then the earnings highlights, over the past couple of years, and I will do a deep dive for the financial analysis for the past 10 years. That is the income statement, the balance sheet, and the cash flow, and then uh, look at other things that I consider when I'm investing in a stock, or even when I'm even considering to invest in a stock, and then give my concluding remarks. But for those who don't know me, my name is Isaac Jonas. I founded this channel mainly to just share my personal investment journey, and I like doing this for educational purposes. But in terms of my academic training, I am an economist, and I studied at the University of British Columbia and the University of Zimbabwe. And now, um, Meta, most people, including myself, I use the services that the organization, uh, provides. I use Facebook, I use WhatsApp to communicate with my family in Zimbabwe and many friends. So one thing that I consider when I'm investing is like it should not be something that is so abstract. A business is based on something that is based on things that I use every day. So I use WhatsApp. So that's why I like Facebook. So you can pause and read here, but you can see for sure that Meta is the world's largest social online network with 3.8 billion family of apps monthly active users. So it's a big platform, and then it has an ecosystem, like I said, Instagram, Messenger, so you can read this. So this is something that I consider as well. And when I just do a quick analysis, I would like to look at the return on investment. Anything that is more than 15% for me, it gives me more reason to dig deeper into the stock, and I do dig deeper even beyond what I'm going to present here before I even consider investing. So, and if you look at the return on assets here, it's like 18 point, let's say 19%, right here. You can see, and return on invested capital, it's massive, 23%. And they do share buybacks as well, which is something that I like. And you can look that and see that it went down a year ago. It was $193.64, but now it's in the $523.57 range. So it fluctuates regularly. So this is something that I look at, and you can see that this was around 2023. I think it dropped when they were taking the company and decided to do the artificial intelligence, but the way they were doing it, investors didn't like it, so it sold off. It dropped from this point, and I remember I had shares actually, and I sold off at around 264. I made some profit at that time, but then this is something that is key when you are investing for the long term. Events like that, they are very momentary, they are very important, because if you get in at this point for a company that has very strong fundamentals, then it's a good thing. In terms of earnings, they've been consistently beating their earnings, you can see here, and they have their upcoming earnings on 26 April. They have the earnings call, which is very important to listen. I like to listen to companies that are investing, and then the results will be published on 26th of April. So this is going to be interesting for the first quarter of 2024, and this was when the results for the first fourth quarter, actually it was fourth quarter of 2023, and they did beat the earnings. Right here you can see, right, green, it means they beat the earnings by 7.2%. Now when I go into the income statement, the financial analysis, for these are the financial statements that are summarized for the past 10 years. I use the rule 1 2 box. I quickly go to the net income, and I see, has it been increasing? You can see there's an upward trend. I can even just check here, right? So this is something that is good, because you want to invest in a business that has, net income that is increasing, profitability. Now, in terms of debt, I don't like investing in businesses that have debt. You can see from 2014 there was zero debt, long-term debt, so that is good. But sometimes it's good to borrow. These organizations, they have a big balance sheet, so they can borrow to just do some activities, operations, but still they can get very good interest rates. But now I then want to compare this to the free cash flows to see if they will be able to pay it off. So they have way more cash flows than their debt, so they can easily pay it off cash and still be fine. So it's not even an issue at all. And I like to look at the inside trades. The latest inside trades, when I checked this, this was on the today is the 16th of March that I'm recording this, 2024. The last activities in terms of sales of shares, and executives, they share, sometimes they sell shares, and I like to invest when they are particularly buying, insiders they are buying. But here they last sold 11 April 2023, right? So I mean, these things happen, but I don't see anything suspicious here. And there are other people who I look up to, big fans and other gurus that I follow, the resources, smart people around them. What were they doing in the latest quarter? Because they are filed regularly with the Securities Exchange Commission in the US. You see that this this fund, they bought, they increased their position by 3.4%, 3.4, but this party Dorsey Asset Management, they sold actually. But these things happen, because the stock, it went up actually very, steeply, and then sometimes, these guys, they cash out, and also to limit the risk, and also sometimes by law they are supposed to maintain a certain percentage in terms of individual funds. So sometimes if the valuation goes up, then they may have to just sell to make sure that they maintain a threshold to diversify, because if you have people's pensions, you don't want to be overexposed in one particular stock or security. Now, when I look at Meta platform, when I compare it with other businesses, the other business that comes closer to Meta in terms of me even considering investing is Alphabet or Google. It's just one business, but they have Class A and Class B, and the other one is the parent company, Alphabet, and then Google is the subsidiary. Now, you can see here that the return on equity, Google is actually beating Meta, and even on the Rule 1 score, it's a much better business. But in terms of management, they are at par, and also you can see 100% score here, and Google is much better. That is interesting. But there are other stocks that are interesting. You can pause and take a look at those, and you can see, like I said, it's a stock. In my view, is a very good play. Also, it's investing in the artificial intelligence sector, but I would wait if there's another significant event. Let's say the shares drop to 300, 350, but even playing writing options puts, so that maybe I can lower my risk and possibly get into it at a predetermined price. But the options, they are quite expensive, so for now I just have to wait if there is another opportunity. Usually these events, they happen, let's say there's something that happens and the story has not fundamentally changed, and I determine, that's when I get in at a huge discount. So that's what I do. So I thought I would just share with you that this is a very good business. But in conclusion, this is one of the top businesses as far as artificial intelligence is concerned. But right now it's priced at the top in my view, and I would wait for a significant event, especially if I don't have some shares for a lower price. But usually these things happen, so I thought I would just share this with you. And if you have